What's going on? Let's get it is Sunday. I hope you guys had a great weekend. And we're going to hop into the Sunday weekly analysis here. Let's hop into the US dollar. US dollar is still pretty bullish, even though NFP was worse than expected. So the jobs report was bad, but everything else was positive. What does that mean? Well, overall, this is still a bullish engulfing candle for the US dollar. For me, I am still planning on buying the US dollar. Now, does that mean I'm going to buy every US dollar pair? Probably not. A lot of US dollar pairs are on the fence on either whether they're going to follow the US dollar or just go against with it. What I'm trying to show you guys is that you can see how USD/JPY had a massive retracement going back down. And this is the weekly chart for USD/JPY. And you can see that the new gap, let me show you guys the 15-minute chart. You can see that the gap here for USD/JPY that started here closing on Friday and all the way down here back at 110.9. Overall, USD/JPY has been downtrending ever since it cannot break 112. So overall, for me, I would be looking to short the JPY pairs, and I'm going to show you guys. You can see how Euro JPY is consistently moving the downtrend with USD JPY, along with GBP JPY. The pound is taking a massive hit, and the vote for the Brexit is this week. I believe it's Thursday. Let me check here. I think it was Thursday. Nope, Tuesday. Tuesday is the main event for the pound. I would strongly suggest not to trade if you're not familiar with trading this. And if you are going to get into it, be prepared for some heavy market volatility on Tuesday. So, and that's going to happen during New York sessions at noon. For them, it'd probably be, I'd say, 8 p.m. at night, since they're 8 hours ahead for the United States. So be prepared for that. And I'm showing you this is a 15-minute chart. Notice that all the JPY pairs that are going against the Japanese yen is that the Japanese yen is treated as a safe haven because of the trade wars right now, and there isn't really a significant buying opportunity for going against the yen versus going with the yen. So that's something to pay attention to. That's why I'm highlighting JPY USD, and JPY GBP, and JPY Euro. So I know this is the 15-minute chart. It looks kind of choppy. But if you look at the daily and the weekly, you kind of get to see the overall view of what the Japanese yen is doing since last week and up until now. Let me go back to the weekly chart here. Yeah, so you can see how USD/JPY had a massive pull down along with Euro JPY and GBP/JPY. And to me right now, it still looks like they're probably going to continue this downtrend unless something major happens this week. But remember that we have the final trade wars is not going to be finalized maybe next week, depending on what Trump and China is planning on doing. So whatever that major impact is going to happen, and we'll see where it goes. But so far, U.S. dollar is still up there. But the Japanese pairs are if you're going to if you're trying to buy something against the JPY, the Japanese yen, it's not really going to be a little bit more. It's not going to be a really good buying opportunity right now from what I'm seeing. So talking too much about this. Euro, I'm still looking to sell Euro. You can see this a really strong bearish engulfing candle over this structure here, and like I said, it is already coming down to touch this, and I want to see it break this structure out of this structure, and then we can come see 109 and then come back to 106. 109, 106. That's 3 cents apart from 112. 3 cents down from 112 is 109. 3 cents down from 109 is 106. So think like how the banks are thinking it. They don't look at 5 digits. They look at the whole numbers. Let's see here. Euro GBP is probably looking to sustain a retracement going back. You can see how strong the gap is on the weekly here. Pretty strong gap, opening gap here for Euro GBP. So I'll probably be looking for it to buy back to this price, 87.5, and we'll see if it targets that 87.5. Reason being is because the pound hasn't really done anything great for the Brexit negotiation. Even if they have the positive vote, they still have to fork up all that money, and that's if the economy can even. That's on the fundamental side. That's if the economy for the UK can even handle that kind of downturn, especially forking up 40-50 billion dollars. I'm talking about U.S. money, but in pound money, it's more than that. So something to pay attention to what happens to the UK when they do finalize the actual deadline to get out. Now the pound had a major gap going down here, opening gap going down. And I'm showing you guys everything on the weekly chart, so you guys get a chance to see what I'm trying to analyze here. You can see the opening gap going down, almost like this one. And I'm probably looking to see how much more they're going to drop the pound. And my plan is to sell the pound, regardless of where the Brexit is going, until I see some kind of major up move or some kind of massive bullish momentum to where it's going to override the 132 price here and keep going. If it breaks 133 and closes above 133, I'm all for buying it. So obviously, nothing's really confirmed of a buying opportunity. Based on my previous candles, the previous candle is that it's a bearish engulfing candle. So if it's a bearish engulfing candle over the other previous candle, then I would be looking to sell the pound. My first target would be the 129 price, and then after that, we'll see if it comes down to the lowest price of 126 of last year. USD CAD, really bullish move here. I'll probably be looking to see where USD CAD be going for this week. More than likely, I'm buying USD CAD and probably see if it comes back to 136.5. If it breaks 136.5 and targets 137, I'm all about buying USD CAD for probably maybe another 2-3 months, or maybe even for the whole summer, for the upcoming summer here for 2019. So something to pay attention to for this price range, especially first bullish engulfing candle closing to 133. This one closing to 134, and then now we'll see if this one actually attempts for 136. So we'll see where USD CAD tries to go for this week. Overall, I'm still buying USD CAD, and we'll see where USD CAD ends up going for this week. Australia. Damn, I didn't talk about USD Swiss. I don't think I did. Oh, so I'll come back to USD Swiss. So Australia, almost. I was looking for it to break the support structure. Hasn't broken the support structure, but based on the closing of Friday's candle, I'm looking to keep selling it and see if it will close down and break 70 cents. If it somehow does not break 70 cents this week, I'll probably be looking to buy. So that's a very key component price right now to pay attention to where Australia might end up going. It could end up consolidating, and New Zealand could end up doing the same thing. So Australia and New Zealand might end up not doing so much for this week, since there's not a whole lot market volatility structure for that. Everything's more focused on the pound, euro, the yen, and gold, along with the dollar. Other than that, Australia and New Zealand hasn't been really doing a major pulls going up and down lately. You can see the structure here of what we're trying to pinpoint. I would be pinpointing my gap price from 72 cents and 70 cents. It's a 2-cent range. So yeah, if you really want to get technical, I mean, counting 2 cents would be 2,000 pips. So if that's what you want to count as, then based on pips you can. But I'm just counting off a price of a bank price. So the value of how the bank would value it. Same now. But yeah, I'm on New Zealand right now. So with New Zealand, since this is a really strong wick pushing up, New Zealand is a lot stronger than Australia. So if you're, so for me, seeing this structure, I'd be more leaning to into buying New Zealand versus Australia. Now, Australia and New Zealand are correlated in pairs, and they move in the same direction. But but as of right now, you can see that last week, I mean on Friday, that New Zealand had much more of a pullback going back up. Now, even though the gap is going down, based on my technical analysis, I would be looking to buy New Zealand and see if New Zealand can come target the 685 area. And then we'll see if it comes target 69 for this week. And I know it kind of sounds going against previous correlations and previous structures of me going with the dollar, because if I buy the dollar, then I'm selling everything else, right? Because I would sell Australia, I would sell New Zealand, I would sell euro, I would sell the pound, I would sell gold. But if you look at the correlation setups for this year and even a couple months back, the correlations aren't really 100% accurate like how they were used to be. So what does that tell me? That tells me that the banks are getting smarter. It tells me that they can manipulate anything that they want. And when they manipulate the price, you're going to have to get a little bit more into the technical side. And you're going to have to learn and understand more on price action candlesticks and where you want to draw the lines on your charts. Without this, staring at the charts isn't really going to help out as much. So kind of you have to remodify, what could possibly happen this year with every single pair. And I'm looking at all the major pairs to see what could possibly be happening. Most of the major pairs aren't really following the US dollar. And sometimes they do, but then now when they don't follow the US dollar, they move on their own terms, and the markets are going to move wherever it's going to go. So be mindful that the correlation and the setups 2 years ago when I was live trading and up until now, the correlation isn't really there. So that's why I'm not talking too much about correlation. Now, if you want to, like I said, if you want to understand correlation, then just Google the correlation of the pairs. So they'll give you a basic setup of what to look for. But my basic principle is that if the dollar goes up, I would buy USD, whatever is USD in front. Then I would sell whatever is going against the dollar, like euro, pound, Australia, New Zealand, and gold. Then I would buy USD JPY, I would buy USD CAD, USD Swiss franc, because they're the base currency up in front with the US dollar. So I feel like I'm kind of repeating myself, but let's get back to USD Swiss franc because I don't think I talked about this. USD Swiss franc is very, very same structure as the US dollar. So I'm showing you guys this right now. USD Swiss franc, US dollar. USD Swiss franc, US dollar. Very similar in price structure, candlestick structure. So that's why I line up USD Swiss franc on my watch list right next to the US dollar. And overall, this price is still up $1, and I'm still looking to buy USD Swiss franc. My next target would be this price right here at the 1,02500. So it's $1.02, because that is the highest price back in right before the end of 2017 and right when in 2016. So if it does not break the 103 price by the end of this month, because this is the last month of the first quarter, so we'll see where things go in for the next 2 weeks here, and then get prepared for the last week of March and see where things are going to go for the second quarter, the 90-day turnaround. There's 4 quarters in a year. Remember, every quarter the Fed either raises rates or lowers rates or have unchanged rates. that goes for every central bank. So yeah, it's not just the Federal Reserve. So very, very important to see where the last month of the first quarter is going, especially for March, and what this week might end up being. Could probably be a consolidation week, and focus on, if you really want market volatility, focus more on the pound. Can't go wrong trading the pound. So it's just that you gotta be very careful on Tuesday when they release the votes again. So we'll see what happens to the deadline there and what gets negotiated, what gets finalized. And then that is it. Like I said, overall, I am still on a buying position, and I'm still following the uptrend on the US dollar unless something happens to cause this price to get rejected again. So other than that, that is it. I know it's a long, extensive video. Anything can change within the week. Anything can change even starting tomorrow for New York sessions. Don't forget that today was daylight savings. So what was it? I know they move an hour ahead, so then they would close an hour early. So Friday, instead of closing at 4 East, yeah, they would close at 3, based on based on the daylight savings time. So just an hour early on Friday. So so that's pretty much it. I know it was kind of a long video, but I hope what I said makes sense. Always do your own analysis. Don't just take my analysis. Do your own analysis. Mark it up. Make sure you know your methods and your strategies behind for what's upcoming for this week, and don't get caught up. Don't get caught up on looking at your losses. If you need to take a break, take a break. Just take it easy, and don't get too all hyped up because the markets are jumping the way you're going. There's a lot of false breakouts happening, especially since last week and up until now. So that is it. So hope you guys catch your money, your profit, your pips this week, and I'll see you guys tomorrow for the LMFX crystal ball contest.